I think the other thing that we've seen with the unicorn InsurTechs is that they're, for the most part, taking on large markets that have nearly infinite potential. So in other words, they're competing with traditional incumbents in business lines that are not niche, right? Like if you're looking at renters insurance, auto insurance, they're not going into areas where the absolute total market is still undiscovered and it's not as big as these nearly infinite markets.
Yeah. This is Tony Liu
and David Gritz from InsurTech NY, and this is the future of insurance.
This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like the Hartford and Farmers use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com. And the Future of Insurance book series, available exclusively from Amazon or at future-of-insurance.com.
David and Tony, thank you for joining me for an episode of the show.
Thanks for having us.
Glad to be here.
I'd love to hear a little bit about InsurTech NY. Is it NY or New York?
It's NY.
NY. All right. I've been saying it wrong. I've been mispronouncing.
Yeah, a lot of people do as well. Yeah, sometimes we say InsurTech New York ourselves, but officially it's NY.
All right. So officially from InsurTech NY, I'd love to hear a bit about kind of why, and because this is relatively new for something that is frankly like, and I hope this doesn't feel weird, but you guys are like a powerhouse in the InsurTech hub space right now. You built something really, really strong, honestly, like pretty quickly if you look back in the history of things. So I'd love to hear a little bit about like, how did this happen and what are you guys trying to do?
Yeah, David, you want to start that?
Sure. Yeah. So our founding story really comes together in two areas. A little bit before InsurTech NY, I had come from more of an InsurTech background. I was part of an early InsurTech in 2015 before it was really a strong word, and helped them build out their product around behavioral-based safety that we grew to the point where it was eventually acquired by EverestRe. And then I had spent some time out in Silicon Valley helping the Silicon Valley Insurance Accelerator start up their programs. And fun fact, they actually had the first InsurTech conference before ITC happened in 2015. That's where I actually found out about them and stayed connected. But I saw their model grow and it was very effective in Silicon Valley, and just kept thinking in the back of my head, like, why do we not have this in New York? There's so many fintech groups, and pre-COVID, you could go to a fintech group probably twice a week and find out what's going on in New York, not to mention all the other neighboring areas where you could see fintech going on. So what we figured is there should be something there. So Tony and I actually met at an independent consulting event done by a group basically David Fields is the guy who put it on, but he has a lot of interesting content about independent consulting. So Tony and I connected, and our goal was to build a product consulting organization. And the first question was, well, how do we get in front of people? So I'll let Tony pick it up from here.
Sure, yeah. So, my specialty was in product strategy, and David Gritz has a product management background, so he felt like it's a natural good fit. And with any new product, you have to have your kind of focused area, right? And ideally is function, which for us was product, but then what maybe the industry also needs to be chosen. So we're looking in different industries, and insurance obviously was one of the industries that we looked at naturally because of David's background and his kind of knowledge and network. I personally didn't have a lot of insurance experience. I mean, I worked with a few clients here and there, but it was just something that I was somewhat keen and more interested to learn about. And so we decided to focus on helping insurance companies, but in startups in the insurance industry. So we also one of the things we looked at is we prefer to work with startups than, at least at that point, in corporates, because I was coming off of 20-year corporate life and really wanted to work with startups. So we decided to focus on helping InsurTechs in the consulting role. And then we decided, hey, what's the best way to meet our clients? Maybe you can do our own events, sort of like what SVIA did. And then our first event was in August of 2019. We organized it very quickly, and then you know, we worked with a law firm. They had a space for 75 people, and we sold out all the tickets like in 1 week. Wow. Right, and we couldn't sell anymore because we ran out of space. Yeah. So we're like, wow, this is interesting, right? You know, we didn't expect that. We thought it would be a lot harder, and so we found that very interesting. And so we, through another event, again sold out again, and went to go to a bigger space, and we sold out again. And so we were like, hey, maybe, you know, this is something we can focus on. And it was still a way for us to work with startups, but more in a scalable, bigger way. Yeah. And helping them with marketing, but also helping them connect with corporations as well. So that's kind of how we started, and then we sort of evolved our business model more towards helping the insurance companies, the incumbents, because we felt that they were the ones who actually had the biggest need in terms of innovation.
Yeah, well, it's interesting because you do a ton with startups, fostering them, helping them navigate insurance, the industry or insurance companies as potential customers. But you also do a lot of programming for the incumbents, for the legacy players, to help them navigate the startup world and these new opportunities that are presenting themselves, either as suppliers or partners, or maybe investment opportunities, et cetera. It's interesting how you guys are looking at both sides of that.
Yeah, we feel like basically what we created is a platform where, you know, we allow the different players in the ecosystem help and support each other. Yeah, and you know, we'll continue to help everybody in the ecosystem. That is our goal.
David, I feel like I cut you off. You were about to jump in. I don't know.
Yeah, no, I think just to build on what Tony's saying in terms of our platform approach, I think ultimately there's two sides of our business. Since we're a community-based organization, obviously, like any business, like we're a commercial entity, so we want to grow. But the other side of it is that we're a community. So ultimately, our goal is to really support all of our constituents, which can always be an interesting thing. So when we're planning out our events for the year, we really have to think about how do we create content that's going to be interesting to the startups, the investors, our carrier members, and sponsors. So it's always a constant juggling act. But I think what's really interesting is because of where we're situated in New York, it makes it one central place to pull everyone together, because based off of what we've found, there's not really any other place where there's more startups in a small square mile or multi-square mile radius and carriers all in the same place, not to mention like pretty much every major investment organization has an office in or near New York City.
Yes, you guys have looked around, you've done research on a few different things. This is one of them, that New York is sort of uniquely positioned. I mean, back to your point of like, why doesn't this exist here? You know, when you were doing stuff in the Valley.
Yeah, New York is definitely a one of, if not the capital of insurance, I think, industry. I think, and based on few data points. So David mentioned startups, right? So when you look at number of startups in New York metro area, you compare that to any other city in the world, it's probably number one, and at worst number two, and it's between San Francisco, Silicon Valley together versus New York, right? And so there's a lot of startups here in the insurance space. And then there's also a lot of insurance carriers and brokers in New York. And that I think is probably definitely number one. You know, compare that to San Francisco, Silicon Valley, they have a lot of startups. There aren't not many carriers and brokers.
Yeah.
In New York, you have both startups and the carriers and brokers. So, and then you add the investors. Yeah, there's a ton of investors. Probably in terms of investment, San Francisco, Silicon Valley might be number one overall. But when it comes to insurance investors, New York has a lot more.
Yeah.
You know, you see a lot of the CVCs, they're home based. Some are in Silicon Valley, but many are in New York.
Yeah, but I think the reason why maybe a community didn't start earlier is because there is such over-representation of fintech groups. Like even within fintech, there's a group called Wall Street Blockchain Alliance, which is just for fintechs and blockchain space. So I think a lot of people made the assumption, which we learned by being in the space, that it was a little bit incorrect, that the fintech and insurtech space was well served. But as many people in New York know, pre-2019, if you were to go to a fintech group and be an insurtech person, to say you were out of place would be maybe a little bit of an understatement.
Yeah. I think to people outside the industry, they don't understand why there isn't more of a natural coming together of the two, but they're really different. The customer is completely different. The regulations different. Like there's so much that's totally different, whether you're selling to insurers or selling to end insureds. It's just because it has to do with money in some way, like that's not enough of a commonality. And even within fintech, like there's lots of differences. Within insurtech, there's lots of differences, but the two don't necessarily naturally just sit together, even though people might presume that.
Yeah, I mean, a perfect example is one of the hottest areas for a long time in fintech was around payments. And if you think about all of the companies like TransferWise that have been extremely successful in payments, and then you ask the question, why are they not adopted in insurance, or why is it not a focus? And really the problem comes down to the point that this is not important to insurance companies. They don't make money by doing more payments. In fact, it's almost the opposite. If insurance companies are paying out too many claims, it probably means that they didn't have good underwriting to start.
Yeah. Yeah, they got a frequency problem. That's a good point. So totally different incentives and interests. So what are some of the other things that you guys have been looking into when it comes to the insurtech space? I know, like, you know, I have a quote from you both in my new book that it's about like the unicorn research that you did, trying to see like, well, what is the makeup of one of these successful, you know, billion dollar plus valuation companies? We shouldn't say successful because they may not be successful as a business, but at least valuation at the point you were doing your research, that was a success. You saw some commonality, and obviously it's tough doing that kind of research because every 5 minutes the list is going to change again.
Yeah.
So it's a snapshot in time. But I think some of the takeaways you guys had seem to be pretty consistent, even though the list of who's where on valuation has moved.
Yeah, I mean, we did this research not too long ago, like last
Like
year,
late 2020, right?
Yeah, and when we did the research, I think globally, or at least US and Europe, there are like 10 unicorns. Now there's like probably double that, and many have gone public, and it's just been a crazy past 12 months. But when we looked at it, the high level sort of consistent thing we saw was most of them had started as a digital MGA and was in the process of becoming a carrier or are already carriers. Less so B2B software companies were helping insurers. That also has changed a little bit. You see a little more of them coming up, like Encore.
Yeah.
But
Shift is B2B, and they just hit the $1 billion valuation.
Yeah. So there's definitely some more of those, but at least at the time of the research, there are a lot more digital MGAs. And I think that trend will still continue. There will be a lot more digital MGA types or / carriers becoming more unicorns and B2B software companies. But there are definitely more of those coming up. And then I think we also saw that many of them actually had insurance, at least like one of the founders, or they had early executives who had insurance backgrounds.
Yeah.
And that was definitely helpful. So, and we saw more than the health side. So in the health side, you definitely needed somebody who came from a health background. I guess health is just one of those things that requires a lot more in-depth knowledge to be able to win, whereas on the insurance side, it's less so. And so some of the founders, maybe CEOs, didn't have an insurance background, but then they'll partner up with somebody who's had that. So that was kind of one couple things we saw as well. I don't know, David, you should call some other ones that we looked at.
Yeah, I mean, a couple other trends that were interesting about the unicorns is just the ambition of the founders. And I think this is a really interesting thing as you're studying InsurTechs, is that most of the founders that started the early unicorns, their ambition was to become a unicorn, and oftentimes they were a second-time founder. So you take Asaf from Hippo, it wasn't his first time around, it's really his third startup. Or you look at Daniel and Shai from Lemonade. I mean, with Shai starting Fiverr was already another public company. So if you look at the founders that are second-time founders, oftentimes they have that ambition to not just build a company that are going to sell for 40 or 50 million dollars, but they want to take it to the maximum potential that it can have. I think the other thing that we've seen with the unicorn InsurTechs is that they're, for the most part, taking on large markets that have nearly infinite potential. So in other words, they're competing with traditional incumbents in business lines that are not niche, right? Like if you're looking at renter's insurance, auto insurance, they're not going into areas like drone cover, where the absolute total market is still undiscovered and it's not as big as these nearly infinite markets.
Yeah. And commoditized markets quite often.
Right.
So the argument has already been made for that market that there's nowhere else to go. It's done. It's just a race to the bottom. Nothing in life. I thought that was an interesting thing, right? There's no life unicorns yet. And we don't see as much activity on the life insurance side as we do in P&C for sure.
Yeah, we do have some hope. I think Bestow and Ethos, there's a good chance that they're going to get there. My bet is probably Bestow will be the first life unicorn. But the interesting thing with life is, I think, I don't want to say this is a judgment call, but I think a lot of the life carriers started believing, just like P&C, that they could go direct to consumer and it was going to work as effectively as P&C. Even though if you look at the history of life from an incumbent perspective, basically hundreds of years of data have said that that's not necessarily the case, and agents are needed to really distribute. And the interesting thing is many of the current crop of digital MGAs or startup life carriers are now realizing that and pivoting a little bit to have distribution through agents or other channels where there's an independent advisor that's helping to navigate and explain the product.
Yeah. Well, so maybe we can use that to pivot a little bit into the future. Because you have this really interesting perspective with the work you do with startups and with incumbents, the research that you do. You know, we were just talking about some of these trends, and look, it's been this way for a couple hundred years in life insurance. But what about moving forward? What are some of the themes that you see developing, not like 80 years out and not 18 months, but some of the bigger things that you think are going to develop in the 2, 3, 5, 10-year kind of horizon? I know that's a broad range of years, but I'm also hedging because who knows when half the stuff will actually materialize.
Sure. So I'll take a couple and I'll give Tony a chance to cover a couple. So I think one of the big themes that is arising is embedded insurance. I think in the old version, and I think Caribou does a good analysis of the different stages of embedded insurance, but ultimately the old version of embedded insurance was the quasi-illegal version of embedded insurances, which is tying, right? You get insurance with some other product. But I think the current version of embedded insurance, which I really hope gets through regulatory evolution, is that the insurance is embedded within the purchasing process. So whether it's travel insurance that's embedded in the trip that you buy for the ski trip, or when you get your skis, they actually come with insurance as part of it. That, I think, is a big trend that's only going to continue to expand. And I think what has helped that is, if you think about some of the other industries where there's been a lot of success, like e-commerce, if you think about in COVID, is probably the biggest success story of COVID. Most people have said that e-commerce has moved forward 10 years faster than it otherwise would have because of COVID. And I think its analog in insurance is embedded insurance. And although there's a lot of regulatory hurdles that need to get passed through, I think embedded insurance is one of the areas that we're going to look back and 5 years from now and say, I don't know why I didn't think this was more of a big thing, but now everything is going to have a component part to it.
So embedded. Tony, what about you?
Yeah, no, I mean, I think that's definitely, important trend. And as part of that, you'll see a lot more. And you're already seeing this non-traditional insurers becoming carriers like, Amazon and Teslas of the world. You see more and more of that. I think that'll be definitely more and more be the case going forward. And then we talked about life, right? And I think life annuity types of InsurTechs, they're still like not that common. We work with a lot of life annuity carriers and try to help them find partners in the space, but it is a little more difficult than PNC. When there's a gap, usually the market fills it, right? And we definitely see more of those coming up. We just looking at our competition, we do early stage competition every year, early at the beginning of the year. We definitely saw more life annuities startups coming up in the early stages. So we definitely see that would be a trend in the next few years.
Like solution providers in that space, or life and annuity companies like
both.
Yeah, both.
Yeah, both. Yeah. I think PNC side we've seen both as well, more in the past few years, and hopefully you will see more of that on the life annuity side. Yeah, it is a big market, right? I mean, there's no reason why there shouldn't be startups in that space.
Yeah. I mean, a third area I would probably add that I think is definitely coming along and beginning to expand within the life space is like the financial wellness and literacy. There's a number of carriers that have specifically told us, hey, we really want to know what are all the startups that are out there that are in this financial wellness space. And I think there's going to be interesting combinations of startups, as you've probably seen, ones where you can incorporate both the will component and the distribution. Like one of the startups that was in our accelerator was interested in that. Dead Happy was in our competition. So I think
it's a great name. I love that.
Yeah. So I think that's going to expand over time is these paired products where you're actually getting some kind of value added financial planning, financial wellness as part of the actual insurance or annuity product.
Yeah. Also, just kind of a separate thing, but we definitely see that the regulators and the state governments, they're more open to try things out and be more flexible and supportive of innovation. And so, New York is great, but their regulators have been known to be very stringent and sometimes over stringent. But we've had a number of conversations with them where they want to change for the better, and they're open to changing. And we see this from other regulators as well. From Pennsylvania, Connecticut, all the states.
North Dakota.
North Dakota. They are the NAIC head of innovation is there as well. So yeah, we definitely see that being also a trend.
Yeah, it's this is the second time this week where that was called out specifically. So I'm going to believe that it's real, because I mean it's fantastic. Like that can either be a gate or it can be a tailwind that helps propel things forward. And I don't know if I talked about this with you guys ever, but like I think it's Kenya, where the regulator has a fund, like a VC fund, to help support more InsurTech. Whether we need to put money into it or not in a given state is one thing, but certainly like what are you doing to allow for things, to try things out? Because a lot of times well-intentioned regulations may be outdated and that stops a newer solution that understands like the market dynamics, the economy is different. So you can't even try something that could evolve to meet this new need that's developed.
Yeah.
But for a regulator saying, no, we're going to allow it without it going E&S, you know, that's the only option you really had historically, is just do it excess and surplus.
Yeah.
Yeah. But I think E&S potentially could become easier over time. I mean, there's 4 states. We actually did a webinar with Lord where they covered this, but there's 4 states that don't have the declination requirement where you have to formally get declined. I think Wisconsin is one of them, Mississippi is another. So I think that's definitely progress forward, because you think about it, right? Someone invents an insurance product that has no analog. How can you possibly have a broker decline it?
Yeah.
And the other thing is, if the departments of regulation don't have a way to batch process APIs of declinations, how are the startups that are fully digital going to be able to function effectively?
Yeah. Well, I mean, that raises a whole other question about whether, like, can an algorithm be the underwriter or the claim handler? Because technically you need to have a licensed individual, not just entity, in some states, not every state. How do you solve it? You know, I was talking to someone earlier today about Gritz, AI ML based syndicate. It only follows, it doesn't lead anything, but still it makes all of its decisions based on what the AI comes up with. And they have to have a human underwriter as the official underwriter of the syndicate, because that's Lloyd's rule. But why? You know, if you don't have a person doing any of the underwriting, why do you have someone there if just for this regulation? So at some point we're going to have to solve for that. And you can't tell me it's about employment, because that's one job. It's not, you know, that can't be the reason for it. One very highly paid, but single job. So what's the answer then on how we handle, you know, more intelligence coming in on the computer side?
Well, I think it's almost, I mean, it's an analog to autonomous vehicles, right? I mean, if you think about it, there's now, is in almost all cases, some driver or some responsible party, but they have the same problem where they have to design away the person, and then eventually they have to design a way to handle the liability. Because if you have 2 autonomous vehicles with no driver that get in a collision, who's liable and what tools do you have to determine liability and how is that covered? I think that's the same sense when you're thinking about underwriting models, right? Like, you have to kind of go from the evolution of a supervised driver to no driver to now what happens when you have multiple no drivers in peril.
Yeah.
Hopefully the cars will start lying about who hit who, and that I mean, you can see like the companies trying to cover up their liability, but like,
Yeah.
at least in theory, we would have perfect information about exactly what happened in the accident. And you'd have like not just 50-50, but like 47.8% liability on this side, because we know exactly what the physics told us. Maybe not.
Something tells me that won't happen. Otherwise, lawyers will be out of business.
Well, maybe lawyers will be automated by then too.
Yeah.
Yeah, exactly.
That's why I didn't ask for like 50, maybe that's 80 or 180 years out, but
years out.
because who knows, right? And like, I know Gartner will say like, oh, 16 months from now, we'll all be driving around or being driven around by autonomous pod. I mean, I think their original projections were sort of like 2025-ish.
Oh, really? Okay.
And that's still,
I don't think that's going
a ways off. And then you need like the whole fleet needs to be moved over. And that's,
well, the other problem is you'll have the Luddites of driving that are like, I just want to drive.
Right. Yeah. And we already have people who are sleeping in the back seat of a Tesla,
right,
which is not ideal.
Yeah, that was actually, so it was an interesting thing that I was reading about. I think it was a Forbes article about the risk of fires in Teslas or just other electric vehicles, that the average car, when it catches on fire, needs 300 gallons of water to put it out. But electric fire takes 20,000 gallons.
Wow.
And when you have problems like Lake Mead being 100 feet minus what it was 20 years ago, right? Now it's like, it's interesting because it's like you have one problem that trades off with another. Like we believe that electric vehicles are going to solve climate change, which is ultimately going to hopefully give us more water back. But if we don't solve it fast enough, then we have to put out the fires for the crashes, which will use up the water that we just saved.
Yeah. Well, we need, if you guys remember the movie Demolition Man, no, what's the one with Sylvester Stallone and Wesley Snipes and Sandra Bullock? Is that Demolition Man?
No, you know, I know what you're talking about, but
well,
no, that was something cop, wasn't it? Not RoboCop, but
not Time Cop, whatever it was.
Judge Dredd. Judge Dredd?
No, it wasn't Judge Dredd, but it's similar. It's like Sylvester Stallone is a cop in the future.
Okay. But Judge Dredd was
right, which it was also, but
something else.
Yeah, this is like he's frozen for a number of years and then he's thawed out because Wesley Snipes got out and they need an old school cop. Anyway, but their police cruisers and their cars, when they crash, they fill up with foam instead of airbags. They're just like, you get like encased in foam. So maybe it's just like a fire suppression system is what we need. The cars need to put themselves out, and then it takes even less water. So maybe, David, maybe that's the answer.
That could be the answer.
Yeah. Tony, you know how I said I don't want to edit these episodes? This might be one of those times when I have to.
Yeah.
No, I don't.
That was fun.
Any other future thoughts from you guys, and then we'll start to wrap things up.
Yeah, I mean, I think the other area that I would really cover is just the shift from more personal lines MGAs to commercial MGAs. I mean, we've seen a lot of interest in areas that were previously, I would say, uncovered. And one of the startups that won our competition, Honeycomb Insurance, it used to be called Agilius, they focus just on landlords that are 2 to 50 units, which is a very underrepresented area, which I can speak from experience. It's difficult to get the right insurance coverage that you want. And that's just one. I mean, we had a company talk in our executive briefing, Energetic Insurance, and they're focused just on middle market solar credit lines. So providing credit insurance for people that are building solar farms, but not the super big farms, just the mid-market, whether it's on a building or industrial. And I mean, if companies like Energetic can find a strong market, I think there's a ton of uncovered areas of commercial lines that are going to get unearthed and built.
Yeah. I mean, another trend that I think we also see is agent tech. Startups that help agents and brokers, which at some point years ago, everybody thought they're like going out of business. There will be no brokers in the world, but that everybody has learned that will not be the case. There will be brokers and agents in the future, that's for sure. And so a lot of solution providers are trying to help them be more effective and efficient. I mean, we've seen some startups who initially built stuff for the carriers, the insurers, and then pivoted to help brokers and agents. And they actually see kind of that it's like easier for them to work with agents because you're not working with giant companies. They're working with a few agents with 100 people, 200 people. They find that it's been easier to actually get them to buy in and actually implement the solution. So we've seen companies like InsurTechs, it's like a chatbot business. Initially, they were focused only on insurers, and then they sort of found a lot of traction with agents, and they're now focusing more on agents, for example. So I think that will be the case going forward. Be a lot of agents and brokers who are going to be very technologically advanced, and they'll be around. They're not going away.
Well, and the carriers want to help their agents and add additional value. So if they can bring them InsurTechs, it's almost the same analogy to the reinsurers bringing underwriting tools to the carriers.
Yeah, that's a good point. Ironically, the tough thing about serving the agent space is distribution. If you get a carrier, there's only 2,500 or whatever PNC carriers in the US, but in a city, there could be more than that just of agents.
Yeah.
And for the record, it is Demolition Man. Not that I was multitasking, but if I was, I would have it on my other screen. At least I know, like, I might be getting old, but I'm not so old that I forgot what the movie's called.
Okay.
That would have been a very dad moment of me if I just couldn't think of the movie name. No, but that is, I mean, that is hard in the agent space. Having been in an InsurTech that was focused on, we're talking about both, and it was like the sales lift needed to get to 100,000 agents.
Yeah.
You know, is mass, and they're all dispersed. And yeah, there's some organizations that bring them together, and you get, you know, different ways to talk to a lot of them at a conference or whatnot. But it is really fragmented demand.
Yeah. Well, it takes a different type of salesperson, right? Like, you can hire a real top quality enterprise salesperson that's worked at a few carriers, and they'll get you 3 or 4 good accounts that could be $1 million in revenue.
Yeah.
Versus you really have to be an efficient SaaS business that has SDRs, quality account executives, and has really good processes to grow an agent product.
Yeah. And you can't do both with the exact same resources or approach. And I think that's a trick.
Completely different sales process.
Yeah.
Right? Yeah.
It is interesting that the agent, maybe it's the distribution hurdle, but the agent space is really ripe for change. You do have a new generation of agents who are not happy with doing things the way that they've been done for, you know, the past 50 or 100 years. And it's not a space that has had as much activity as the carrier facing side. So it feels like something's waiting to happen there. And there is a lot of stuff brewing, but like, where's the big kind of explosion that we've seen, like in serving the carriers on P&C in particular? You guys think there's something coming there?
Well, we see, you know, one trend we do see is a lot of agents are consolidating.
Yeah.
And so the small agents are consolidating with bigger ones, and even the bigger ones are consolidating around the broker side.
Yeah.
And so we definitely see that being to be the case continuously. There's also a lot of like aggregated agent businesses. I forget what you call those guys, but you know, they exist out there. So there's definitely a trend there, and a lot of agents. There's still, most agents are not technologically savvy, but that's good news for InsurTechs, because that's the untapped market, right? So as long as they can continue to have good kind of communication and marketing sales process and get, win their hearts, I think there's a lot of opportunity for startups.
Yeah. Guys, just in the last couple of minutes, you have more activities brewing. More events, more research. You want to hit on some of the things that are going on so people know what they should be turning to you for?
Sure. Yeah. So my understanding is this is going to be airing in September.
Yeah, late September.
That's late September, right? So we will be probably in the middle of our accelerator program. And by this time, we probably have selected the startups. But after September, our first big event, public event, will be in October. Hopefully, it will be, cross our fingers, in person in New York. It will be on the topic of building distribution channels, and we'll have panels and speaking content related to building distribution channel through startups or internally. So we'll have different speakers who can talk about both of them, and there'll be networking. That'll be October, and you can check our website for the dates. And then we'll have another one, another event in November. And then our big event next year is going to be a spring conference, March 2022. We'll be hosting it in Columbia University. They have an amazing space there. So we'll be hosting a hopefully, again, in person. It has to be in person. We already booked everything, so if it doesn't happen in person, we're kind of screwed. But hopefully by then, COVID will be, be old news.
Rearview mirror, let's hope.
Yeah. So we're looking forward to that.
Well, that'll be a cool thing to give me an excuse to come to New York and see you guys in person. David, I met you actually at a SVIA event before lockdown. It's my last event. The
February one. Actually, Tony, were you at that event?
Not sure.
Was it at the Palo Alto Elks or South San Francisco?
Yeah, it was the one in the Elks. Yeah.
Okay, maybe I was there, but I didn't. I was
Or
there.
you might have, I think you went to the other one, Tony. I think you went to the one at South San Francisco Conference Center.
Right. You were okay. So then I didn't.
Well,
Yeah.
if you were there, I didn't meet you.
Right.
From my perspective, you weren't there. But David, like that was the first I heard of InsurTech New York, and not from you, but from people who were like, "Are you going to the InsurTech New York or NY? Sorry, InsurTech NY event?" And I was like, "Wait, the what?" So that was the first that I learned about it.
That's cool. Yeah, and we did get a lot of interest very quickly for sure, and I think that has to do with hopefully a little bit of what we did, but just the New York market and there's a lot of amped up demand.
Yeah. When you guys, you did a really good job really quickly of making use of the virtual stuff. I've only used Remo on a couple of other events that I've been at, and I think you guys did a really good job with that. But you had some pretty big events that really pulled people together very quickly. So there was this hole where people were like, how are we going to keep the community and the conversation going? So in that sense, like, a little upside from COVID in terms of at least creating the flexibility for people from all over to engage in a way that they wouldn't have done in person per se.
Yeah, I mean, virtual has its cons.
Yeah.
It is a little more harder to meet people. Like to meet, some respects you can meet people more easily, but to develop relationship, it is harder, right? So there's some cons there, but the pros is you're able to meet them actually, right? If you're in person, there would be people like from Europe and Asia you never likely meet because they'll not come to the event, but virtually it's very easy to meet them. So we're able to have events that are bigger and you have the breadth of people that you're able to meet is higher. So going forward, I think virtual events are kind of here to stay, but it will likely be sort of a hybrid type of event. So every event, there will be a virtual aspect to it, along with the in-person event aspect.
Yeah. David, that's your sense too.
Yeah, no, I think hybrid is definitely going to be in place for insurance industry. I think the interesting thing that I've been just trying to observe is, are we going to get that roaring 20s-esque revenge spending, revenge vacation type of thing, where people want to make up for their year and a half in captivity and just aggressively meet other people in person? But I think that's maybe more other industries that are more physical in the sense. Like I've seen actual in-person events happen a lot earlier in the real estate space. So I think it may depend on the industry, but I think going forward, because insurance is such an international thing, it's going to be hybrid.
Yeah. So big flash, we're cutting into the episode. We're about to wrap it up, but there's something really important that we actually didn't talk about when we first recorded this, because it wasn't far enough along yet. We recorded a little early, but now it is. We have to cover it. So can we talk about the Insurance Collaboration Index? What is this? Let's get some more info about this. David, do you have some insight?
Sure. The Insurance Collaboration Index is a cross-functional project we're putting together to gain insights about the relationships between insurers and InsurTechs and how they work together. And it's a survey that we're conducting. Our hope is to get as many InsurTechs involved as possible. They will actually be giving their feedback about how they have worked with insurers. So it's a multi-point survey that's going to allow us to find out best practices, and then also ultimately to rank the carriers that are the best at collaborating with InsurTechs.
I think it's brilliant. It's something we've seen in other industries, but never in our industry. Like I'd share with you guys in the automotive space, where every year there's a group that puts out this Plant Moran. They put out this supplier and OEM survey to see, like, of all the major car manufacturers, who's the easiest to work with across a different number of different criteria and overall. And it's really valuable, not just for the suppliers to know who to work with, but also to help the OEMs ended up appreciating a lot, the car makers, to understand, like, well, where do we fall and how do we stack up against our peers? And more importantly, why? So like, if a supplier prefers working with one of our peers, do we care about that? Is there something we want to do about that? Or are there reasons why we understand why we fell this year and actually we're okay for, whatever the reasons may be. But yeah, having that insight has proven really valuable to the auto industry. Wouldn't it be great if we had that here? Is that sort of the why behind it for insurance as well? What's the thought there?
So that's definitely one of the pieces. I think Plant Moran has really been able to effectively get buy-in on both sides. But at least for me, and definitely Tony can share his perspective as well, there's been a lot of energy that has been invested from InsurTechs in terms of going to market, getting created, and ultimately getting funded. This last half of the year, there's been over $7 billion invested in InsurTechs. And all of that energy goes to really one sole activity, which is creating new products that can get to consumers. And the majority of those are InsurTechs helping insurance carriers to be more successful with their existing products, their underwriting, or their claims. And because of that, we thought it was really important that if all these collaborations are happening between all the major carriers, even the smaller carriers and InsurTechs, and the 3,000 or so InsurTechs are fighting for that, then we should really be sharing what's happening behind the covers, what are the best practices, and for the startups that are looking for which carriers are the easiest to work with, if we had a simple ranking, it will really allow those carriers to get credit for the good work that they're doing and not be dependent on size. And then also for the startups to really focus their energy and efforts, and a lot of times the venture capitalist money, so it doesn't go to waste.
Yeah. Having been on the startup side, we did a lot of that kind of offline, like check with your peers and and even in my advisory work, it's like, well, who should we go to first? Which carriers are easier to work with? Like these are conversations that are already happening, but they're not structured. There's no consistency to it. You'll get a different answer from two different startups about the same carrier or the same people or same department in the same carrier. So trying to bring some more kind of science to it to understand holistically how do folks stack up and where should we focus our efforts. There's huge value in that. Who's a part of this? How does this all come together?
Yeah, so early on, we realized that InsurTech New York alone was not enough to put it together. We needed deep research expertise. We needed people that had sat on the carrier side making those decisions and people within InsurTech. So Ryan, you were actually one of our early.
I'm playing dumb here, but I know a little bit about it.
Yeah, and beyond that, we're working with a number of organizations that provide either experience from the consulting side. We wanted to keep it independent, so no one from a startup or a carrier is actually on the core committee, but we have Pivot Global involved, we have Conning Research involved, CB Insights, and a few independent consultants like David Bradford, who co-founded Advisen, Irene Yang, who led the efforts at Amazon for their insurance group, and Mark Gardella, who has been an industry veteran in a lot of the carriers and now as an independent consultant can really share his perspective without being biased or biasing the results of the survey.
Yeah, no, that's really critical. Tony, I feel like I had cut you off before if you were about to jump in, but what are some of your thoughts on this?
Yeah, so I mean, I think David shared basically the why and the who's involved, which has been really pivotal in us getting started with this. So maybe I can share how we got started and what we ended up doing. So our goal with this kind of initial survey research was to initially just rank, not just what, just our initial objective was to rank the top carriers. And, we will probably have multiple iterations of this, but we wanted to keep it somewhat narrow so we can learn from the first experience. So we decided to kind of narrow down and focus on InsurTechs who have basically who work with carriers as customers. So these are more B2B solution software types. And our definition of InsurTechs is pretty broad. So, it could be a startup or it can be mature vendor who's been around for 10, 20 years, anyone who's actually provided services and products to the carrier group. And we're limiting to carriers at the moment, but again, we have plans to expand it beyond carriers to brokers, as well as potentially startups who are in the digital MGA space. And so we kind of, all the committee got together and agreed on that. And then we realized that in order to rank the carriers in their collaboration index, we needed to break it down into different components. And so we came up with about a dozen components that would make up the ranking, including decision-making, budgeting, and resource alignments. And we came up with a very simple survey. We asked startups, a few startups that we know, to fill it out, just test it out. And now we feel like we got a really solid survey, and really we're ready to ask all the InsurTechs, startups and vendors and mature vendors to fill it out.
Yes, this conversation, hopefully people are listening to this when it's released. And if you're listening to it in like March of 2022, this isn't relevant anymore. It's all been done already. But we're putting this episode out right before the survey collection is going to kick off, and you guys will have a big effort at ITC as well. How does a startup get involved in this? Yeah,
so there's multiple ways they can fill that out, and I think David can share a little bit more of the process. But there's going to be a survey link that you go in, and you can rate carriers that you worked with in the past, whether a POC or full implementation, and you basically rate them. So that's the process. We're going to have a booth in ITC that you can come to our booth and fill it out, or you can just go to the website and fill it out. But one thing I want to talk about is benefits. Like, why should you care? And we sort of talked about this. Brian shared a little bit about Pam Moring, who actually we talked to before we actually started this endeavor, and they've been super helpful in sharing the insights they had in creating the survey, which is now an industry standard. It's been around for 20 years.
Yeah.
Hopefully we'll get there with the insurance industry too. But the benefits for startups is, this is literally probably one of very few ways for an InsurTech vendor to influence your customer. So by rating the carriers you work with, you're influencing them. So if the carriers see that they're highly ranked, you're rewarding them. And if the carriers are not highly ranked, then you're kind of telling them, hey, you can maybe do a better job, right? And we see this in the manufacturing world. There's actually this communication that happens through this survey, and the OEM manufacturers actually want to be a better collaborator because of them.
Yeah.
And so just on that note, like, why should carriers care? Well, carriers should care because if you're a carrier who's doing a great job in collaborating, then you're going to be highly ranked, which is great for you guys. You get more vendors and InsurTechs to work with you. So it's great branding and marketing. You attract a lot of great employees, which is an issue in the insurance industry.
Yeah.
But then if you're not highly ranked, it's also great because you'll get a chance to know and compare yourselves to other players in the industry, and you can learn from them and do your best to get up with the ranking. And again, this is happening in manufacturing and other industries. We're just trying to learn from other industries and improve the overall innovation kind of productivity of this industry.
Yeah. And it's, as you said, it's not just a single, like, give us a 1 to 5 star rating.
Yeah.
There's categories, there's reasons that go into driving that score. So you could, maybe you didn't do as well as you'd hoped. You could understand with some nuance what's driving that. So, you can't do everything all at once. So where do you focus your efforts? Having talked to enough carriers that struggle with how to be innovative and move their culture and get the right institutions in place internally, to have that kind of guidance or roadmap from a really wide array of people giving feedback is huge. And of course, you're not going to get that from any of those startups directly because it's scary, right? Like, they want to do business with you. They're not going to tell you that you're difficult. So you've no way to hear that otherwise. It's the anonymity of it actually is pretty critical here, isn't it?
Yeah, that's right. Yeah. I mean, so that's really critical to know. If you're a InsurTech or vendor submitting the survey, your data is going to be completely anonymous. We're not going to share your data at all. We're actually going to actually ask you contact information, but that's just to verify that you are who you are. It is not like to share that information to anybody. We're not going to sell this data. We're literally going to just share this information for the betterment of the.
Yeah, and it's all, there's minimums, like you have to get at least so many surveys completed on you, so you can't tell, like all the things that support anonymity. And that's part of, to the team, you know, there's this really rich team behind it. So a lot of these things are things these folks have dealt with in their day-to-day anyway. So there's good consideration around it.
Absolutely.
Yeah, that's great. And then how, if you're a startup and you want to participate, if you're a carrier, and you want to find out the results and the insights from it, where do folks turn? How do they get involved?
Yeah, so there's a few ways that you can get involved. First is on our website, InsurTech NY, we will have a page with more information that you can get started. We're also going to be putting up a website insurance collaboration index, which I'm sure you'll probably have in the show notes, Brian. And then, of course, we're going to be at InsurTech Connect in the Innovation Alley. There will be the InsurTech NY Village. So stop by. We will have representatives that can help work with you on the survey. And if you're there, we'll probably look and seek you out as well. So we'd love to have you participate. And I think one thing I really like to stress is that we give you the ability to rate up to 5 carriers. So really help and rate as many as you have time for, because it's only going to give back to the community more. And don't just rate the ones that you had a good experience for. I mean, ultimately, think about this as a way to give feedback, so those that you didn't have the best experience for will hopefully improve, because you're not going to be the only one saying it.
Yeah, that's a great point. Good, bad, or indifferent, feedback is valuable. And that I'll put the links in there. InsurTech collaboration, insurance collaboration index.com. I'll put the link in the show notes, and I won't mess it up when I put it in there. For startups, they can get to the survey that way, and for carriers, they can get more information, sign up to stay updated for when the results are released. And I know there's a lot more to come on it, but this was too important for us to just end the episode and not find a way to bring it in. So apologies for the different look and feel, the different audio. Got David and Tony together at the same time. This is a big deal. So we had to add this into the episode. David, Tony, thank you very much for joining me twice for this episode. And for all the support along the way, not just for me personally, you guys have been a huge supporter of mine, but really just for the community at large. It's awesome what you built with InsurTech New York, and excited to keep seeing what you guys keep putting out.
Thanks for having us again, Brian. And I really appreciate your also contribution to that index project.
Appreciate the opportunity to be here.
All right,
thanks, guys.
Thank you.
Hey, thank you to David and Tony from InsurTech NY for joining me for this conversation. A bigger thank you to them more broadly for creating the community, but for all the times that they've let me be a part of it. Even though I'm from Boston, even though I'm a Red Sox fan, I can still play with the InsurTech NY crowd. And they've been really open arms to everyone across the country, across the world, even just opening their virtual doors. And I know as this goes out, they will be doing some in-person stuff again. So it'd be great to see the community thrive there. This is really necessary stuff. And I've said this, when we had the Ohio guys on as well, we need to keep fostering what this industry can do. And that means working together, that means talking together, that means collaborating, that means getting together. And it's things like InsurTech NY that is making all that possible. So thank you to David Gritz. Thank you to Tony Liu, to the whole team, because they have a whole team working on this, the great events that they produce. Honored to have been a part of many of them. And I'm holding the Future of Insurance Volume 2 because on this page, there's a pull quote, and it is, not that you can see this if you're listening, it's on page 17, but it's from Tony and David. And it says, what we see here is that becoming a carrier is hard and not suggested as a first move, but eventually almost all of them become carriers, suggesting that despite it being hard, it's likely the best path forward. That's just a bit of insight from the research that they've been doing that we talked about here. There's so much good stuff to take from InsurTech NY.
and from the future of insurance. So pick up the book if you haven't gotten it yet. And of course, you can get volume 1 and volume 2 together, the disruptive duo, buy them together. Easy way to take in all the lessons from the incumbents and the startups. future-insurance.com/disruptive duo to get both books from me, personally signed to you. And of course, you can get them from Amazon in whatever format you wish, wherever you are on the planet that is served by Amazon. You can buy the books that way. And if you're not somewhere that is served by Amazon, well, reach out to me. You can get to the contact box on future-of-insurance.com. Let me know where you are, and we'll see if there's another way for you to get your hands on the books. So I will leave things there. Thank you again to the InsurTech NY crew. Thank you to Medallia for supporting the show. Thank you to all of you for listening and checking out the books. I hope that they're valuable. That's what I hear from people, but I still hope that they are. And of course, I will see you, or you will hear me next time with another great episode where you can get some inspiration about how we as a community can move forward. Thanks, everyone.